All right, I just have a few more things to talk about, some last topics having to do with stockholders' equity. One is a restriction on retained earnings. So a restriction on retained earnings makes a portion of your retained earnings unavailable for distributing in a dividend. So it kind of freezes your retained earnings. You can't distribute a dividend out of it. Maybe it's because you have something coming up. Maybe you have a pending lawsuit that you may need to settle. Maybe you are going to be building a new plant. Maybe you have plans for an employee stock plan and you're going to be purchasing a large amount of treasury stock. And so if you have restricted retained earnings, usually you'll just report it in the notes to the financial statement. So an investor who's looking at your company can see that there may be a limited amount of dividends in the upcoming years. Sometimes they will make an appropriation where there will be a journal entry that will record the restricted retained earnings, and it'll show that the restricted retained earnings and the unrestricted retained earnings together equal the total retained earnings. A prior period adjustment can also affect your retained earnings. So if you made a mistake in a previous year, maybe you made a math error, maybe you applied GAAP incorrectly, and so your net income in a previous year was wrong, and we know net income increases your retained earnings, that means that your retained earnings balance is now going to be wrong. And so when we discover the error, we will adjust the beginning balance of retained earnings to what it should have been if we would have not made the mistake, right? Because we want our beginning retained earnings to tie out to last period's ending. So we don't just change our beginning retained earnings. We will record a prior period adjustment. And then here's the retained earnings statement that we have been working with since Chapter 1. We start with last period's ending retained earnings becomes this period's beginning retained earnings. We add our net income. We subtract our dividends, and that's how we get to our ending retained earnings. Now, when you were doing your financial analysis project, you probably didn't see a retained earnings statement. What you probably saw was a statement of stockholders' equity. And so the statement of stockholders' equity is going to show the changes to all of the stockholders' equity accounts, not just the retained earnings. So here's our contributed capital accounts, our retained earnings, our treasury stock. And if you look at the retained earnings column, this is going to be what a retained earnings statement shows, but you're also reflecting the changes into the other accounts. So here we can see additional shares of common stock were issued. So common stock and additional paid-in capital increased during the period. They bought treasury stock, so we can see the treasury stock going up. We know treasury stock is listed as a subtraction because treasury stock has a debit balance.